Let me start off by saying yes, I believe Palantir in the short term can continue to stay irrational and bullish and even continue to work its way closer to $200 per share. So I do believe that if my intention was to try to make money right now in the short term, Palantir would be a great choice because it has a great story and great price momentum. With that being said, I also want to talk about, in my opinion, some of the risks that comes with Palantir. You guys let me know down in the comment section what you think. A lot of you guys like when I make videos like this. Some of you guys hate it because you just don't like when there's any negative talk about a company that you might be invested in. And to those people, I would say, go find a rock and kick it. That being said, let's go ahead and jump right into it. The thing that I want to talk about is Palantir is one of the best performing stocks of 2025. It is leading the AI revolution in the sense of it is leading the hype of the AI revolution. Palantir is a company that for 2025 has an ROI, if I'm not mistaken. Let me double check 2025 from the start of it to where it is that we are now. It's a little bit north of 130%. From the lows that we made during the trade war, because during that retracement, Palantir went from highs of 125 all the way to lows of, 66. So it lost 47% in about 40 days. So again, we've said this many times before, any stock that is incredibly overvalued during a downturn experiences one of the largest pullbacks within that timeline, right? Because it never belonged up there. So when people begin to panic and sell, these are the ones that see the biggest and the most selling pressure. With that being said, I can't just talk about the bad. I have to talk about the good. From the lows that we made of 66 to 67 to the current highs, a whopping 170 to almost 180% gain. Again, very impressive. And this is why I'm saying this. In the short term, if I wanted to try to go with the flow of the market and where all the hype is right now currently given, Palantir would be at the top of my watch list because not only is it incredibly hyped up and has great price momentum, but I'm not going to lie, it has pretty good data to support it in the sense of it's what the company makes does not compare to what the company is currently valued at. But the company is growing quarter after quarter in an area that is very intriguing for the stock market is the best way that I can put it, right? We can see consistent and steady growth. So although everyone knows that the valuation of this company is insane, when you are seeing this company grow quarter after quarter after quarter and exceed all expectations for what is currently given for earnings per share and revenue, it allows it to continue to thrive at an extreme multiple of what the company actually produces. For those that don't know, Palantir trades at a market cap value of $443 billion, nearly $500 billion. Okay, let me show you this very quickly. Palantir, with that valuation, right, nearly $500 billion, has a net income as a company of less than $1 billion, $772 million. Overall for the year, it produces about $3.4 billion in revenue, but its net profit, net income as a company is $772 million. So it is showing signs of progress because it's actually got itself out of the red, and now at least it's making some money as a company because just a few quarters ago, it was actually losing money. So this is where the big disconnect is. Remember, when you're investing, traditionally speaking, in these companies, in these stocks, which are shares, ownership of these companies, of these businesses, this is a business that is valued all the way up here, $443 billion. $443 billion. Yet you're telling me this company makes less than $772 million, less than $1 billion, yet it's trading at 400 of a market cap of 443 billion. This is why its PE ratio is 581 times its earnings. This is why it's so insane where people make jokes of it, but at the end of it, who's the last one that's laughing? Trust me, I get it. I call this company Thanos because anytime I short it, it feels invincible. I like to have fun with it because that's all you can really do when markets are this irrational. I just want you to see the fundamentals for those that even care. So if markets do pull back and this thing sees a 50% retracement, you're not like, oh man, this makes no sense. Why is it selling off 50%? Oh, okay. It's because it was trading at a premium. And if you're acknowledging that I'm okay with it, I know that it's trading at a premium. I'm just riding the hype because I like the company, I like the story, and also it is showing signs of growth. So it's kind of hard to knock the company down when it's still growing, right? Like there's some BS companies out there, we all know it, right? That are incredibly overvalued, but also have terrible fundamentals. They're not even growing quarter after quarter. HIMS being one of them, HIMS, right? It's being investigated. Its partners are dropping it. It just missed earnings on one of its most recent earnings report. Like that is a complete BS company, right? But Palantir, at least in the space that it's, it conducts business and the way that it's growing, it's kind of like a unicorn in the sense of it's incredibly overvalued, but the fundamentals and the growth are still so attractive that they're kind of like, but just let it keep going, right? And this is why I'm saying that in the short term, based off of current, economic condition and environment, this thing can continue to push up. And let me also explain this, right? Palantir hits 96 on the monthly RSI, on track for the 14th green month out of the last 15. Insane, right? But consistent, and you have to respect it until not, right? All I'm saying is be careful with leverage. Leverage is incredible until it turns against you. I would not personally be very leveraged at these levels because, again, when it quickly turns against you, leverage becomes a terrible thing. Ask any investor, especially at these overbought levels. There's nothing wrong with being invested, and especially if you acknowledge that, it is trading at a premium, just please look out for yourself, right? Nothing wrong with being invested with whatever you have in cash. Leverage, if you begin to leverage 2, 3, 4 times of what you actually have in cash into the stock, it might go well for a little bit, but as soon as that downturn, goes against you, it can get very bad very quick. Just a heads up. But I have no reason to hype up Palantir. You guys know that I know that it's overvalued, but we have to talk about it could even go higher. Right now, $7.4 trillion are sitting in money market funds. I talked a little bit about this in my video yesterday. I'm filming these two videos the same day, so I'm just referencing it. But I found it to be very interesting because the reason investors have so much money, $7.4 trillion in treasuries and CDs, just safer forms of investments, more conservative. As soon as interest rates begin to drop, that can really shift and cause these stocks to push up even higher, which means that they even become more attractive to these investors. That means that they can pull all the money that they have allocated into money market funds and pour it into the stock market. And that would even drive markets and prices and stocks even higher. Again, I don't want to accept that, but it's the truth, right? That's the reality that we live in, and it's important to acknowledge it so you don't put yourself in a tough position that you later end up regretting, right? Again, the Federal Reserve, as of right now, according to the most recent Fed rate monitor tool, is expected to cut rates in September, but we'll see. As more economic data comes out, will that probability change, right? I'll make sure that I do my part in keeping you guys up to date. We talked about Palantir and its consistent growth when it comes down to how the company produces its revenue source, its geography. Gross margins, 80%. Yearly stock return at this point, it was 74% for the past 4 years. Fair market value is $76, yet it's trading at 180, right? The last 186 has 54% of downside. Analyst price range at 149. Average value is right around 85. So, man, this is a very exciting stock, right? And there's a lot of things that this company can still do to try to gimmick its way up to the $200 price point. That's why I wouldn't be surprised if Palantir makes its way there. All I know is that I know that this rubber band eventually will snap, just like it did before, and quickly correct itself. With that being said, I can see why it's so attractive to so many traders and to so many investors. I love how they compare Palantir and HIMS, right? HIMS, in my opinion, is an absolute BS company. It's not even conducting business in a space where the growth is really even there or the potential for growth is there. It's a healthcare drug company that sells erectile dysfunction drugs and hair loss. I mean, at the end of the day, like, it's a very saturated market, but it has a good story and it had good price momentum until recently, as investors began or as partners began to drop it and it began to get investigated. Nonetheless, both are incredibly overbought in my opinion. But again, I like how they compare the two because they're two companies, two stocks that have had insane returns for 2025. The last thing that I want to share with you is this thing that I think you should consider. This was found on x.com, previously known as Twitter. It says PLTR. Why would the CEO modify the 10b5-1 plan to sell more shares if he thinks that the company is going to the stratosphere? For those that don't know, what we're talking about is Alexander Karp, who loves bagging on short sellers. He says that, I watched this video where he stated that, oh, I love when short sellers lose money because they were only going to use that money to snort cocaine or something like that. I don't know what it is that he said, something along those lines. I think that he has a personality that for most people is very likable, but things like that I think just show proof that there's uncertainty in the company's potential, and he knows that the stock is overvalued because at the end of the day, why would he adjust this plan that would allow him to sell more shares if he wants to? And the only reason you would want to adjust that is because you want to lock in profits, right? And you don't really have to think that the valuation is sustainable. So it says, what's it called? Option 1, you hold shares. Or option 2 or option B, you really don't think that the valuation is sustainable and you want to dump the shares but are trying to mask it with a 10b5-1 disclosure while taunting this company will 10x in revenue in the next 5 years. Saw this with Badir and Enphase. For those that do not know, I'll pull it up very quickly. When it was riding the highs and seeing it now with all the execs of Palantir selling. This is not an opinion. This is a fact. A lot of the executives of Palantir, because of this modification, are just loading off on Palantir. But don't worry, once it drops, I'm sure that they will gladly take the shares off of your hands for 20 cents on the dollar. Just again, making a hint that a 50 to 80% drop would not be far-fetched for a company of this caliber. Let me show you what ENPH, which again was also a very hyped up company. Everyone talked about it until they didn't, right? And that's what happens normally with a lot of these stocks. They start off very low, they have great price momentum, they have a great story, markets are sustainable. Remember, this was the post-pandemic rally, caused it to push up. We even hit highs in 2022 until we didn't, and it all starts crumbling down, causing the stock to go from highs of $339 all the way to lows of $34 per share, losing 90% of its value. And guess what their executives were doing? They also masked their ability to sell by making this adjustment and be able to liquidate their majority of their shares at those extreme and overvalued levels. I just think it's important for you to know of what has happened in the past before. And it's not that it's wrong for Alex Karp to want to sell his Palantir shares when it's at an insane valuation. I mean, I think anyone would. If you think about it, what did GameStop do? A lot of people were complaining that it was Robinhood's fault, or they're trying to point the finger at Wall Street. What did GameStop do as a company? And so did AMC. They liquidated their shares at those insane levels and sold their own shares, and then they were okay with buying some back later once it dropped 50 to 80%. So I think it's important to pay attention to what executives are doing, not because they can predict the future, because no one can. We don't know how long this rally is going to last. And that is why I started off this video by stating, yeah, in the short term, and especially if they do begin to cut rates, markets can pump up even higher because the current market environment supports it. But until it does, until we find that trigger that, oh, okay, well, things are actually much worse than what we're expected, right? Inflation begins to uptick, if the trade war begins to get worse, if tariffs begin to cause inflation, and instead of cutting rates, the Federal Reserve has to raise rates, who knows, right? No one can predict what's going to happen, but there is no question that at these elevated levels, all I'm here to remind you is watch the leverage that you put behind your trades. There's nothing wrong with wanting to be invested or wanting to trade these very bullish stocks that have amazing returns, right? Be my guest. Buy as much it is as you want. But just be careful if markets do turn against you or these stocks do begin to drop, which there would need to be a significant trigger, then at that point, at least you're not leveraged, right? So the only dollar amount that you lose is a dollar amount that you have invested, and that's more manageable versus you're incredibly leveraged. And this is always what happens with like those crypto bros. They're incredibly leveraged at these overbought levels. The markets sell off and then they get margin called. Again, just a nice little reminder for beginners. You should never be afraid to take advantage of opportunities, but you should also never avoid managing your risk. So again, when in doubt, never be afraid to cash out. I'm super excited to follow up. And again, Palantir to the moon. I think that it can continue to push up, just like many other stocks right now are incredibly overvalued. But again, there is no signs of a possible change of direction. So this is why I wanted to talk about and highlight all of the great things that are happening with Palantir, but also shed some light on the risk, the concerns. I think every trader and every investor should always be presented both sides, and hopefully just giving you the resources so you can make a more informed trade decision based off of your risk tolerance if you want to be a part of it or if you don't. And no one should convince you otherwise. I appreciate you guys' time. I hope they earned a thumbs up. I would love to make more videos like this. If you guys want to see them, all I ask you to do is drop a thumbs up and subscribe. Also, do not forget, I upload I go live every single day right at market open with our LPP team. It's designed for complete beginners. And if you ever want to tune on into our live trading session, it's the second link in the description down below. And we'll see you there. Like always, let's make sure that we end the year on a green note. Take care, team.